Welcome to Pressure Points. Our topic is Google earnings. And as of the time of this recording, which is just after the earnings call ended, the stock is down 7.5% in after hours. That compares to down around 6 or 7% when the numbers initially came out. It dipped down to as low as down 8.5% at one point. And so I think about this as a slight recovery, but overall it's been down. The reason it's been down, which is the pressure point, is, of course, what's happening with Google Cloud. The growth of 30% fell short of expectations of 33% growth and was a pretty sharp deceleration from the 35% that they reported in the September quarter. Now, that was an impressive 35% in September, but analysts had expected it to back off a little bit to 33, and of course, here we are at 30. As a point of reference, now we've got Azure, their cloud numbers out. We're still waiting for AWS in a couple days, but Azure was 31% growth in the December quarter compared to a similar 31% in the September quarter. And so when you put the context of what's happening with the stock, basically they missed the Google Cloud number, and I think there's kind of this windfall that is a little bit bigger of a deceleration in the business relative to Azure. But of course, there's always more to hear on the conference call. And they did talk about, in terms of the business at the Google Cloud and what the potential growth rate could be, that to expect variability in the numbers in 2025. They pointed out that they have more demand than supply, so they are supply constraint, but the growth rates are going to vary based on availability of the hardware. And so what does that mean is that there's probably some risk to the March quarter Google Cloud number. The street's looking for 30% growth. My best guess is probably comes in something like 27% year over year growth. But I think for the full year, where the street's at 28% right now, I still think that that's a good number. And the reason why I think that's a good number is they're continuing to not only reiterate that they see more demand than supply when it comes to the infrastructure piece, but they're putting their money where their mouth is and guiding the CapEx number to $75 billion. That would be up 47% year over year over 2024. The street had been expecting 18% growth going into the quarter. So this was a meaningful ramp up. And so you just kind of play yourself that you're a fly on the wall in some of these meetings at Google. They're obviously seeing something that they like when it comes to cloud business. And even though it's not showing up in the numbers today, they're putting their money where their mouth is when it comes to infrastructure. We'll talk a little bit more about that and the bigger impact on the broader AI trade in a minute here. But the bottom line with cloud, it was a disappointment, but I think that the opportunity in cloud remains healthy, and this continues to be a very nicely profitable business. So that's the pressure point. I'm going to jump down to below the fold here, and the first topic is related to search. And this, if it was up to me, I think this would be the pressure point, but the market wants it to be a cloud business. But the reason why I think the search piece is so important is that, of course, is their bread and butter. It's more than half of their earnings, and ultimately is that it's going through a big transformation. What we have going on with Perplexity and GPT and really overhauling how people view search is really raising the bar of what Google needs to do in the years to come. And Sundar was pretty clear on the call that they need to continue to improve off of AI overviews. He said that this is going to be the most innovative year in search. Every year should be incrementally most impressive, most innovative year. So in some respects, that comment is to be expected. In other ways, it's really telling that they recognize that their current search results page, which I would generally consider to be a mess, I think needs to be cleaned up. And easier said than done, because the cleanup piece, just to go and streamline it and do a ripoff of Perplexity, isn't going to be good financially for Google, because obviously there's going to be some sort of give in terms of the monetization. You just can't make that change. And so Sundar was just careful to kind of tease out the lines on how that transition would look, and just kept emphasizing that their search business is doing well. AI overviews are increasing engagement. The more time people ask questions, the more shots they have on net in terms of monetization, and that's kind of going to be their roadmap. Overall search in the quarter was up 12.5%. And so it was up 12.2% in the September quarter. The expectations were in December for it to be up 11%. So it was growing about 1% faster than what analysts had expected. But even though that percent seems modest, it's really important in showing that They are doing a good job of kind of navigating this transition, but they're still, in my view, a long way from what the landing page, the search landing page, is going to look like for the long term. I think there's still meaningful overhaul that has to happen. Look no further than the blueprint of Perplexity. So that's the search topic, making progress, still have room to go. Moving down to the third topic is just related to other products. It's pretty clear that kind of the message on the call here more broadly was we got a lot of exciting things coming. They talked about Aster. That's the concept of bringing the real world around the physical AI world. They have a power research product, which don't be confused with GPT's similar name product that they just launched. I've been using it. It's remarkable. It just thinks, and it is just structurally more sound advice that it's giving. And so Google's talking about a similar type of product. They also said to expect more Gemini powered apps starting next year. And that really the monetization vehicle for Gemini is going to be through that $20 subscription product, which is a pretty slow build. If you look at what GPT has in terms of the number of monthly users, it's probably right around 200 million right now. So it's a pretty slow build up to, if you think about Google search, they got 3.5 billion daily active users. So they got a long way to go. I didn't leave the call particularly excited about when these new products are going to have an impact on growth. It's probably 26 or 27, but it's pretty clear they want to innovate. And I think that you put that perspective into it, and they're clearly making the investments in this. I think it's safe to say that you're going to see some results for that in the next year or two. The next topic is just I wanted to make a quick comparison to what's going on with Meta, because they're obviously the other bellwether here with search. Meta's overall business grew at 20.6% in the December quarter. Google's overall business was at 11.8%. Meta trades at a 24.5 multiple on calendar 25 earnings, and Google trades at a 20 times. So there was a discount there. But in general, if you look at kind of where the excitement's coming, there's just a lot more energy, positive energy around what's going on at Meta. I think that's for good reason. And I think Google continues to need to kind of get into gear. And we're owners of Google and believe in the company longer term. But we think that they really need to get in gear in terms of getting some of these new products out to boost the revenue growth to be more in the mid-teens overall. Last topic is just related to AI infrastructure, as I mentioned. A lot of people, their headline is just related to that 75 billion. My takeaway is that I think we're jumping the gun to say that the AI hardware trade is done. And I think there's going to be more longevity to this trade than people realize. I believe that the software trade will kick in. Maybe now is a good time to start building the software trade. But I think what we have seen from 3 of the 4 hyperscalers so far is a resounding affirmative in terms of them wanting to continue to invest aggressively into this infrastructure, despite what's going on with DeepSeek. We still got Amazon to hear. If Amazon even blinks as much as blinks about their CapEx, that's just, people are just going to throw out everything that Google and Microsoft and Meta has said. But if they hold the line, which I think that they will, and say they continue to expect CapEx to be up in calendar 25 over 24, I think that's kind of the final reassuring point. They got to run the table on that topic. There are 3 of the 4 steps through that, and that's what all eyes and ears are on for Amazon on Thursday night. On behalf of Pressure Points, I'm Gene. Bye for now.